If you give me a few minutes, I'm going to tell you the secret behind consistent trading. And as a quick hint, it's not discipline. It allowed me to have returns like this, and it is one of the quickest ways to solve most of your trading problems. I know it did for me. It solved emotional trades, it removed all the inconsistencies in my approach, it removed the mental fatigue that comes from watching charts all day, it removed the poor execution timing that cost me thousands over the years, and it removed the inability to trade multiple strategies at once, and most importantly, it solved one of my biggest issues, which was the constant second guessing that killed my confidence to execute strategies. Now, before I tell you what it is, let me just reduce my camera size and equip a pen, and we can get ready to kind of go through this presentation. Now, what it is automation. I actually run a portfolio of 10 plus automated strategies that have made me over 150,000 over the past 5 years. Here's just my returns from last month. You can also check out my previous, or I think it's 2 videos ago now, which was my January recap. Now in this video, I'm going to give you the layout of different ways to approach automation, so you can just copy the ways I do it, or at least have a good foundation to start your own. Now, apart from my personal trading, I've actually also worked with over 200 projects, backtesting and automating strategies in pretty much every market. I've worked on very simple retail strategies to family funds managing millions that need robust execution engines. So how can you actually do it? Well, there are 3 main ways to automate your trading. We've got platforms. So this can be like QuantConnect, NinjaTrader. There's a couple others. If you don't know any of those, don't worry if this is like your first video into automation. I'll explain kind of each one. There's also custom codes, so if you want to write something fully custom. And there's also a hybrid method that can be really useful for some particular traders. But just before you can fully understand each way, let's lay out the fundamental steps that happen when you're automating. I've done a little kind of markup diagram here where you can kind of see each individual component, and we'll kind of go through each one of these and probably a bit more detail as well. But fundamentally, we have application, which I'll explain in just a second. We have market considerations, we have order management, and we have risk management side of things. So let's get into the first one. The first one is the application. This is what is going to be sending and interacting with your brokerage/server. This could be a platform or custom code using a brokerage's API. If you're not too sure what an API is, it's just an application programming interface. It's a very wordy way for basically just saying it's a way to interact with another application. Now, within this application, you'll have your strategy logic, such as, let's just say, a very simple strategy as longing when RSI hits 30 on a particular stock, or it could be, taking a long position when BTC hits the 200 MA. Whatever your strategy logic is, that's where we're going to actually put it in this application, which, as I've kind of just mentioned before, this is going to be either custom code or for a platform as well. Now, what's the key here is understanding what you will be interacting with before we make this application. A common question I actually ask people if I'm ever working with them is, what market do you trade, and do you have a current data provider? Now, I'm going to assume you don't know the answer to this question, so I'm actually going to give you a couple of examples. For example, in crypto, the easiest exchange to work with is Binance. They're one of the biggest exchanges in crypto, and they also have amazing API documentation, so they're very easy to work with. Now, compared to small cap traders, your only option really, if you're going to be shorting small caps, is going to be DAS. If you're not too sure what small caps is, it's pretty much any stock that's below 500 million market cap, and the main edge there is shorting them because most of them are junk companies. To give you a further rundown, if you're trading equities, you'll probably want to use IB or DAS, and IB stands for Interactive Brokers. Interactive Brokers is amazing for anything large cap. You can even do futures as well, as I mentioned just below, and they've got amazing documentation and a really solid API, at least compared to all the competitors. Now, for futures, you got a couple options. I personally use NinjaTrader to run my automated strategies, but you can also use TradeStation. I've never personally used it, but I have heard great things about it. For crypto, as mentioned before, you got Binance, and you also have Hyperliquid. It's a decentralized exchange that I've worked with recently as well, and it can be really good to work with if you need some alternative to Binance. And then for options, I will say options is probably the thing I've worked the least amount in, but IB is a very solid option as well. Now, once we know this, we can actually better plan out the application. We'll know what data and connections we'll need for sending out orders when we get a signal for our particular strategy. This brings us onto order management. Now, to give you a bit of a simplified rundown, you'll have your application, which will be going into the order manager or be sending out orders, which would be classified as your kind of order manager in that sense. It would then go through order routing. Most of the time, this is kind of through the brokerage you're sending it to. And then lastly, it would be through the exchange as well, or it can be through the order routes you're sending to as well. And if you're not too sure what like the exchange would be, it would be like sending over to Binance technically, as they are an exchange as well, or it'd be like IB then sending on to NASDAQ, for example, in equities. Now, if you're going to be using a platform such as NinjaTrader, commonly used for future strategy automation, they'll handle all the order execution. They actually have functions that you can use of just like exit long, enter long, etc. And this saves you a lot of headaches. So if you can, I would say try and use a platform for execution side of things. However, a huge caveat here is not all platforms are the same in terms of quality. Some of them have really weird assumptions that you wouldn't expect when dealing with their order management. So at least from my experience of working with a lot of platforms at the moment, NinjaTrader is really clean, as well as IB. If you're going to be using something completely different like QuantConnect, I have heard good and bad things about them. You'll want to go over all the logic and also just ask people around in the community what they think and if they've had any struggles either working with it or developing for it. Especially if you're new to coding or using a platform like this for automation, you'll really want to explore around, and you can probably even ask AI as well, as Gemini and Perplexity have pretty good knowledge of most platforms nowadays. If you're not using a platform, you're going to have to use custom code. Now, there are multiple cases of why you'd want to use custom code. I'm just going to take you through a couple of them real quickly. Let's say you have data that the platform doesn't have. So a really easy example for this is, let's say we were creating something around Twitter or social media sentiment. So I'm just going to draw a box here, and let's imagine this is all the data you have on social media. So this is like basically. If you have this data, most platforms are not going to have that integrated. There could be ways you could import it in, but that could be a headache in itself. So most likely what you'd want to do here is, if you have this custom data that is causing entries and exits, let's just say for this case, if a particular ticket has more than like 10 mentions, so let's just say Tesla as a really easy example, then we're going to be going long. And the custom code here, which you could write in Python or another coding language, would then be getting that data. And then you would have to handle the order management side of things, so actually sending those orders, whether that be to, let's say, IB, so Interactive Brokers. Next, one thing you really do need to keep in mind is, if you're doing your own order management, you're going to have to think of all the logic, such as reapplying orders if they are not filled, how to handle limit orders that may be gapped up or below your particular price level, especially if you're using, for some reason, stop limit orders. You need to have all that sort of logic to handle those. Now, I know this is getting a bit technical, but I want to try and provide as much value to kind of give you some assumptions or awareness around potential issues you could run into. Now, this is also intertwined with sending these orders over to the brokerage, which then can handle passing these to the exchange. This is also the time where you'll maybe want to consider adding some extra logic. So this could be like risk management logic, right? This could obviously be the classic stuff, such as just a stop loss on your particular position, but it could also be things such as a max loss on the day. Now, I would recommend, if you can do it by the brokerage, I would always set that up through the brokerage itself and not through any custom code. Think of it as having a professional security team guarding your money versus a DIY alarm system you've installed over the weekend. Anything that is really fundamental to your capital, such as protecting max losses and stuff like that, or even like the max amount of shares you could send to a particular platform, like an order, you would want that handled on the brokerage side. Now, not all brokerages offer all of this, so sometimes your only option is to do custom code. But if they can, I would always recommend setting up your risk management side of things. Obviously, probably not stop loss, because that's not going to work, but your max loss, etc., through the brokerage. Lastly, I want to go over the hybrid approach. Especially if you're new and you have never done any automation before, a hybrid approach can be the first gateway to solve a lot of trading issues, and you don't even need anything overly complex. This can also be a part for someone that wants to maintain a part of their discretionary edge. So let's say you've been trading maybe 2 to 10 years, etc. If you have a really solid edge from your experience watching the markets, you maybe don't want to have something that's fully automated for your entries, but you are not incredibly consistent on your exits, so you could set up some sort of automation in that side of things. This could also mean automating stock selection. This is a really good one in my opinion. There's a lot of scanners out there like Trade Ideas, etc., even TradingView, where you can set up an automation in essence that is telling you alerts of what stocks you're going to trade, and that removes a whole component of discretion. Or it could just be the take profit and stop loss, or any other combination like that. And that could be using like a range order. And that's probably the most simplistic example I could give you. These can be surprisingly effective at removing inconsistencies and also giving you some of your time back from away from the screen. Now, this general understanding really would have saved me months of time in the early days. So I hope it can help. But if you really are focused on getting rid of emotions and inconsistencies from your trading, automation really could be the answer for you. I know it was for me. If you need further help, check out the links in the description. It is all the info you need packaged up for really any trader that wants to be algorithmic or systematic.